primarily use technology behind the firewall, and that's really because that's where the banks are comfortable. Right. I think over time, some of that will move to the cloud. But look, we work with a lot of household names. American Express. I mean, here in the United States, American Express, PNC, Santander has U.S. and the largest bank in Eurozone. We work with Itaú in Brazil. We work with Siam Commercial in Thailand. We've now signed up over 200 financial institutions globally. Some of them you've certainly heard of. Some of them, when we sign contracts sometimes, I think I've never heard of that particular bank. But
there's MoneyGram as well. You've got a great partnership with MoneyGram.
MoneyGram is a really big deal. For the primary reason is I think MoneyGram, more than maybe any of our other customers, is demonstrating the value from a just pure economic point of view of why this is good for shareholders of MoneyGram. MoneyGram, for those who don't follow the company, is about a $1.2 billion enterprise value company. They have a lot of debt, so the market cap is only a handful of hundreds of millions of dollars. Right. What's interesting there is that they have negative working capital of around $300 to $400 million. Now, that negative working capital is there is because if I want to settle a transaction with the Bank of Liz, and the Bank of Liz is dollars and I'll be Mexican pesos, I would pre-fund money to the Bank of Liz, and Bank of Liz would pre-fund to the Bank of Brad. And then we would use messaging to debit and credit that. But that means I have put dormant capital out into kind of, you almost think about it as the global transaction engine has to have oil in it to work. And so the oil is cash that sits in these accounts all over. For MoneyGram, that's several $100 million of negative working capital. The idea is don't use cash and pre-fund, but use digital assets in real time to move value. So the Bank of Liz could hold $1, sell $1, buy a unit of XRP, move the XRP across a digital ledger into, I guess you were dollars on pesos, from US denominated exchange to a Mexican denominated exchange, sell the XRP, buy a Mexican peso. So I've gone from dollars to pesos in real time.
On which value, which currency value?
Well, you went from dollars to XRP, and there's
because currencies fluctuate day to day.
That's a great question, and so these transactions are happening so fast. You're talking about seconds. That one of the kind of red herrings here is people are like, hey, I've had bank executives say to me, look, we're not going to use cryptocurrencies. There's way too much volatility, and I let them get that out, and then I say, okay, wait a minute, let's actually look at the math on that. When you do a SWIFT transaction, the average transaction, let's just say, is 3 days. That's 270,000 seconds. Trust me, I did the math on that. If you multiply 270,000 seconds in a low volatility asset if you compare that to 3 or 4 seconds in a highly volatile asset like XRP, it turns out you're taking less volatility risk with an XRP transaction than you are a fiat. Now, what happens with SWIFT is someone is hedging that risk for you. When you do a transaction to dollar, yen, what have you, someone's selling you that currency risk to the settlement of 2 to 3 days from now. With XRP, it's happening so fast, you don't really need to hedge it because you're in and out of it in a few seconds. And so we haven't seen that be an issue. And MoneyGram went live with us this summer. Unbeknownst to us when they did their earnings call in August, they went from skeptics to, we were working with them for a year to get that deal done. They went from skeptics to, holy cow, they couldn't say much more nice stuff about us. So we're pretty happy about that.
Okay.